We want to look at Bitcoin real quick. Here we can see again, and I'll go over to the big board here to go over Bitcoin. Bitcoin is pausing today thus far.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway shares why Bitcoin could soar above $100,000 and breaks down strategies to become a winning trader and investor in crypto. Let's catch him up to learn more.
Now again, we had the beautiful move. We can see the small parallel. So we have parallels within parallels, which is amazing stuff, right? You have these lows right through here, okay? We got right down here the last few days, and sure enough, it surges right back up, high, high. And then the idea here and what I'm thinking could happen, and remember, it's always subject to not happening, right? Everything we talk about, it might have, I usually don't bring it to your attention unless there's about a 75% chance of occurring. Otherwise, I don't really, for me as a trader, if it's not 75 or greater, I'm not even looking at it personally. But the idea is, I do think that this continues to favor it. You have your upsloping channel within the bigger channel that goes back to the 2007 highs. Look at how these two lines are merging right over here. And again, the idea is I could see us going like this right up into it and then seeing that pullback off of that level that I've given you now for probably about a month. We've talked about my target being $107,000 to $108,000. So that, again, is very intriguing how this parallel is meeting that upper line right at that key level. All right, so let's keep an eye on that. I remain short-term bullish on Bitcoin till at least that parallel, those two parallels are, joined together and essentially meet. All right, next up, let's take a look at oil real quick. We'll go into gold. Oil is pulling back. It did close above this little bit of a level here. So again, it hasn't confirmed a breakout, but it's borderline. If it can confirm, it goes to 74. And again, I will be looking to potentially short it at 74. If we look at natural gas real quick, nat gas upticking just a little bit. Again, you just have this upsloping trend line here. You can see it very clearly right through here. If this breaks, you get a bigger move down. As long as this holds, we could easily go back and test 365. As of now, no trades from me whatsoever on it. And see what gold is up to. Gold is actually fascinating. So you can see for members in my service, my commodity service, I drew this on because, again, you had a 3-bar surge. You closed. And this is very nuanced, but let's, in fact, go over to the chart here. So as a technical trader, you pay very close attention to the wide range red candle. All right, remember what we talked about. So as long as we were inside of this parallel, that's a classic bear flag. It favored downside by about 75 to 80%. Once we broke above it, it reduced the probability of downside to probably about 65%. Once we close, see this candle right here yesterday? It closed above the high of the red. Essentially, it swallowed up the red or negated the red candle. That flips probabilities now to the opposing side. So what it means is that you're still going to get pullbacks in gold, but now you look to see the pullback like this that'll lead you to your next move to the upside. Now, again, is it possible that we could crash all the way down and that changes again? Absolutely. My job as a trader is to just be taking into account every candle is a new piece of the puzzle. And that new piece of the puzzle may change. It might have, you're doing a puzzle. You're like, oh, is this a dog? Oh, no, it's a cat now, or whatever it is. You're putting in one piece and you're seeing a little bit more of the picture. And that's what you're really doing as a technical trader. You're just looking for that next piece of the puzzle. And it's not our job to say, oh, no, it has to be this or it has to. No. It doesn't have to be anything. The charts can change at any point. My job is to understand and be quick to adjust so that I can make money on whatever direction or even save myself money if it looks like it's going in an opposite direction of a trade that I am in. So right now, you expect this pullback. You can see the arrow kind of pointing like this. I would look for something like this. As long as that, now that this has been negated, as long as that kind of stays here and doesn't take out these lows here and this area down here, you would anticipate another move up at some point in the future.
Bitcoin has surged past the $100,000 milestone, showcasing remarkable resilience amid a market reset and renewed spot demand. The rally, driven by a funding rate reset and strong spot bids, underscores a shift in momentum that analysts believe could propel BTC toward $110,000. Early week losses were quickly reversed, with the Coinbase Premium playing a pivotal role in signaling robust buying activity and renewed investor confidence. Liquidation activity in the futures market also contributed to the upward trajectory, with $101,500 emerging as a significant resistance level. Traders found fresh momentum as the perpetual to spot basis turned negative, indicating that spot markets were leading the charge. This dynamic, coupled with the fully reset funding rates, set the stage for Bitcoin's recovery to six figures. The rally also follows the release of U.S. Consumer Price Index (CPI) data, which showed a modest uptick in inflation. Initially, macroeconomic uncertainty weighed on the market, but traders returned with renewed confidence as inflation concerns were brushed aside. This resurgence has set a bullish tone, with analysts emphasizing the importance of breaking $101,500 resistance to sustain Bitcoin's upward momentum. As Bitcoin consolidates its gains, the path toward $110,000 appears increasingly achievable, fueling optimism for further market highs.
If we take a look at the S&P 500 or the SPY pre-market, we can see that the markets were basically going neutral to slightly lower, and then the PPI data came out when we got a little spike lower. Now listen, in the scheme of things, the S&P is not negating yesterday's rally. Again, the NASDAQ had the big move yesterday as tech stocks were hot. We know Tesla made a new all-time high as well. But overall, yes, the markets are down, but they're not negating yesterday's rally. Generally, PPI is not looked at as being as important as CPI. CPI is consumer inflation. PPI is producer inflation. Now, the only thing I would point out is that usually producer inflation eventually becomes consumer inflation. Why? Well, simply put, the producers are getting hit with more inflation there. It's costing them more. What do they want to do? They want to pass that overage cost over to the consumer. So eventually that likely becomes consumer inflation. Looking at the numbers here, the actual month-over-month 0.4%, folks, versus a forecast of 0.2%. That's a big jump here. And then the actual for year-over-year is back to 3%. Just like that, folks, 3% inflation versus the forecast of 2.6. So what's surprising here is yesterday we had the CPI, which was forecasted to increase, and it did. It came right in at the increased levels. Here the forecasts were actually lower, and we blew by them on the producer side. Again, that is major news here for an overall market that is banking on many Fed cuts going into next year. The question is, can the Fed do that without spiking inflation back to 4, 5, 6, 7%? Obviously, there's one way to get out of inflation making a big move up. It's probably a recession. That's really the only way at this point that we're going to see that happen. All right, let's go to some charts here. This is one of my big favorites to show right now. This is the NASDAQ. Now, the NASDAQ yesterday broke 20,000 for the first time ever. Now, if you know the way I've talked about it and what I teach in the Winning Trader series, we talk about how major even numbers oftentimes have a subconscious psychological impact where it kind of can be the blow off top through those even numbers. In fact, we saw it just a week ago or so with Bitcoin when it broke 100,000 and then it came back to 91. So it's very possible or we're on the verge of something like this with the NASDAQ. Now, just to reinforce that, take a look at this parallel channel. We have a parallel channel from the COVID lows, and you put it to the high here of the bull market in 2021, to the lows right here in the bear market of 2022, and look at where the NASDAQ is. We're literally about 50 points away on the NASDAQ from tagging this trend line right here. Now, again, just looking at history, we can see, again, the major lows of the market, the two major lows, COVID and the bear market of 2022, were at the lows of this parallel, and the highest point of this parallel is the bull market high in 2021. So by default, we can generally conclude that there's a higher proximity or higher probability of some sort of pullback here. Now, do we know, is it going to be a 3%, 5%, 10% or more? We don't really know, but what we do know is that probabilities, and I'm talking about greater than 50%, there's a chance that we're very close to a big pullback. Now, I've talked about the cycle date coming up here in the next couple weeks and so forth. Remember, it's the 15th of the month, but because of the holidays and the volume being so light, I'm not really assuming any major events will occur until we get into January. But again, I just want to give you guys that cycle date anyways, because that is important to keep an eye on. All right, so again, look for that NASDAQ to pull back over the next few weeks if we tag that upper trend line. Again, it's about 50 points higher on the NASDAQ composite. All right.
Solana's price has surged over 6%, reaching $230, as the blockchain continues to capture market attention with its technological advancements and growing ecosystem activity. This recovery marks a significant milestone, with Solana up 121% year-to-date, reflecting its resilience and appeal as a leading blockchain network. Key to this rise is the integration of ZK rollups, a cutting-edge technology enhancing privacy and efficiency across the network. Projects like RCMHQ are leveraging Solana's ZK virtual machines to ZKVMs to improve scalability and computational power, attracting both developers and users seeking advanced capabilities. Network activity has also played a critical role in Solana's resurgence. The blockchain's total value locked, TVL, increased by 70% in November, reaching an impressive $9.5 billion. This growth highlights a surge in economic activity and bolstered confidence in the network's potential. From a technical perspective, Solana's price has rebounded strongly from the $200-$213 support zone, signaling robust buying interest. However, resistance at $230-$242 remains a pivotal hurdle for further gains. With its innovative advancements and increasing adoption, Solana is solidifying its position as a major player in the blockchain industry, driving renewed market optimism. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.